All eyes are on the new Modi government's first full budget, and if you're wondering what's in it for you, well, we believe we have you covered. Expectations are that the finance minister will lower income tax rates to appease to the middle class this time around. Here's what we know so far from what we've read, and let's try and deconstruct that for you. Well, if reports are to be believed, the government wants to focus on the middle class savings and hence even boost consumption in the economy. The Union Budget 2024 is hence likely to introduce reforms in the income tax structure with a focus on reducing taxes, especially for lower income brackets, and that too if you're in the sub 5 lakh rupee tax bracket at present. So what can we expect? Well, reports indicate that a revision of taxes in the new tax regime may be announced in the upcoming budget in the month of July. And that could mean good news for those opting for this new tax regime. Back in 2020, the Union Budget saw the government introduce the new tax regime in addition to the existing old tax regime, with lower tax slabs but without the traditional deductions. However, the adoption of the new tax regime continues to be an issue for the government. A Business Standard report says that the government may introduce additional deductions under the new tax regime this time around, especially to broaden its appeal. Remember, Section 80C benefits right now are not applicable under the new tax regime. There are indications that this benefit may be extended now to the new tax regime to encourage more and more taxpayers to opt for it. Now, what is the Section 80C? Well, Section 80C of the Income Tax Act 1961 encompasses deductions for a range of savings and investments. These include your LIC insurance contributions, the Public Provident Fund, your PF contributions at work, and much more. The annual limit for the Section 80C deductions under the old tax regime are set at 1,50,000 rupees. Another proposal includes the potential enhancement and tax reliefs by increasing the Section 80C deduction limit from 1,50,000 to 2 lakh rupees, but again in the old tax regime. A key proposal under review is actually increasing the tax-free income limit in the new tax regime from 3 lakh rupees right now to about 5 lakh rupees. This way, more disposable income in the hands of taxpayers will encourage them to perhaps switch to the new tax regime. Some reports also suggest that those earning over 15 lakh rupees annually may see some tax relief in the new tax regime, which is presently taxed at 30%. The 15 lakh rupee threshold could be pushed higher, with more taxpayers paying 20% instead of 30% tax. So all eyes, like I said, are on Modi 3.0's maiden full budget scheduled for presentation in the month of July. What eventually comes out of the finance minister's budget speech could still very well be a surprise, but reports right now indicate that inflation and unemployment concerns could become budget priorities, and an effort to boost consumption will of course mean more money in the hands of the common man.